The markets are crashing, everybody's worried about a recession, and the trade war keeps escalating. Today, I'm excited to announce a tariff and recession-proof company that I believe can easily 10 times. Now, this company is Hydrate. Hydrate has three main verticals. Their nurse network and franchise white label. That is their core business, and now they have their newest vertical, which is the VSDH1. Essentially, the VSDH1 is the most promising vertical, allowing companies to essentially become mini HIMs, selling direct consumer. Before, there was a lot of skepticism on this vertical and whether or not it might be a dud. Today, I feel like all the skepticism should be cleared as they partnered with Dr. Frank. If you guys are unfamiliar, Dr. Frank is essentially a UK guy that is pretty popular for his method on weight loss. Essentially, they've served over 500,000 people in less than 2 years. Now they're looking to serve people in America, and essentially Hydrate's partnered with them. They won't be charging their typical fees, but they have Dr. Frank committing to marketing, which will help. And then instead of their typical 30% markup on cost of goods sold, with Dr. Frank, they're using a 50-50 profit sharing basis, which shouldn't be too bad of a deal. I want to get into some numbers. So essentially, right now, with the price trading at $1.17 Canadian, their market cap is a little bit over 52 million Canadian. As you can see, the expected revenue of their core business is 22 million. I should zoom in a bit here. But yeah, with that being said, just their core business, not even their new vertical, you'd be looking at a price to sales ratio for 2025 of 2.4. So it's not a super demanding valuation. And this core business, I'm not too sure what the net income is going to be like, but I do believe at the very least it'll cover all their expenses. So with that being said, I want to dive into a little bit of numbers on VSDH1. Right now, they've sold over 400 licenses. So I have set up a base case, a bear case, and a bull case. Essentially, the bear case is they sell no new licenses. The base case is management's projection of 1,000 licenses, and the bull case is about the same on licenses with a little bit of other different things. So why I've set up the orders per day to range from 5 to 20 is because that's about what management expected. They expect each license to be doing about 5 to 20 orders per day. So that being said, I have 5 on the low end, 20 on the high end, 12.5 is the middle. Cost of goods sold, it's a little bit similar to HIMS in the sense that they had an average order value of 168. HIMS had a really high gross margin of 80%. These would represent a lower gross margin, but essentially you're taking the cost of goods sold, multiplying it by the number of licenses, number of orders per day, and 365 days per year. You get revenue of this. Hydrate pays a 10% royalty to their parent company, Victory Square. They're left with a net income of this before tax. 25% tax rate leaves them with a net income of 10 million-ish on the bear case, 80 million on the base case, and 155 million on the bull case. And that gives them a bear case forward P of just 5, base case forward P of 0.65, and a bull case of 0.34. Now, with explosive growth and a forward P of less than 1, this is an insane bargain. It almost sounds like it's too good to be true. And I believe the market thought that. When we first heard about this VSDH1, sure, there was some hype, but at the end of the day, a lot of people were just curious. They thought, how could this be possible? Is this really true? Does it make sense, right? In January, we figured out who some of the licensees were, and it was Drip Bar. Now, Drip Bar sells IV drips and such across the states. But until then, or until now I should say, we haven't heard about much new information. So it made us very cautious, and we weren't really sure, is VSDH1 a dud at the end of the day? I mean, I don't think, if it was a dud, obviously that'd be bad for the price. But with the valuation of a 2.4 price to sales for 2025 just on their core business, it's actually a pretty undemanding valuation. So I'd say the risk-reward ratio is really good. Now, just thinking about this Dr. Frank partnership, which I do believe really clears things up, Dr. Frank, as I mentioned, did 500,000 patients served in less than 2 years, right? This is primarily in the UK. As you can see, US has a population 5 times UK's, right? So if you take that 500,000 divided by 2 years, divided by 365 days, you get 685. Now, I consider that to be the bear case for success in the US because US is a lot bigger. Dr. Frank is now established and he's already figured out how to scale. So that being said, I think the worst case scenario is they match the US's success. With it being weight loss, the cost of goods should be higher and the average order value should be higher, but I do have it a bit on the lower end with that being considered. So for the bear case, you're looking at about 7.5 million revenue. After the royalty, you're looking at 6.75 million net income before tax and then 5 million after tax. Now the difference here is instead of a 30% margin, because they're doing a 50-50 profit split, I believe the margin may end up being around 15%. But essentially the bear case for only this Dr. Frank partnership really is 10.4 PE, right? And that's just neglecting everything else, right? And these estimates, before, it was hard to say whether or not they could be true or if they're conservative or if they're just outrageous. We really didn't know. But after this Dr. Frank partnership has come to fruition, really, there should be no doubt on their VSDH1 vertical. The base case I have is really just them having similar success relative to the population, a middle range for cost of goods sold, and then similar calculations for the rest. And that gives us a base case forward P of 1.5, which is very, very low. And the bull case is because, Americans are a little bit fatter than people in the UK on average, so they might need more weight loss drugs. Also, Dr. Frank, like I mentioned, he's established, he knows how to get going now. So with that being said, I have the bull case being 20% better than the base case, which I believe is very possible. And that would give that hydrate a forward P of just a little bit over 1. So essentially, no matter how you look at it, whether you're just looking at it from their core business, that it's not great, but I would believe you wouldn't have too much downside. Whereas you look at VSDH1, right? Even the worst scenario, or just the Dr. Frank partnership, even the worst scenario, you're actually left with a really undemanding valuation and explosive growth. So I believe this company really should just go a lot higher. And I say I believe it can easily 10 times because the base case scenario really does suggest that the stock would 10 times. And before I made a video on this, I highlighted a lot of risks. And a lot of the risks are still there, but certain things with the licensees and just not knowing how well they can do, having this Dr. Frank partnership and the news coming in today really just gets rid of a lot of that bear case. And I think VSDH1 just can't be a dud anymore. So that being said, I also mentioned that this is Tariff and Recession-Proof. This is a company that operates in America. Their stuff is from America. So that being said, there should be no problem regarding either of those. And with it being telehealth, like if people are sick, it doesn't really matter if it's a recession. They're still going to use the drugs they need. So for the most part, it's also recession-proof. Some things to look forward would be the uplisting to the TSX, because right now they're trading on the TSX Venture. I think just with how things are going right now, they definitely meet the minimum requirements. They're about to create a lot of value, and the management has mentioned that it's a top priority. So sooner rather than later, they will be on the TSX, and eventually, maybe within a couple of years, they'll be on the NASDAQ. But yeah, essentially, I think that it was a really good buy when I first mentioned this on my channel, but especially with this Dr. Frank partnership, which the market hasn't priced in at all, I think it's an even better buy, and it just really looks outstanding now. So I thought I'd make another video. But thank you guys all for watching, and if you have any questions, please feel free to let me know.